Hi, this is Guri Gill, and welcome to Week 3, Term 1 Market Recap from Economic Society. This week's market mover was Grange Resources Limited. Up more than 50% this week, Grange Resources Limited owns and operates one of Australia's largest integrated iron ore mining and pellet production business, located in the northwest region of Tasmania. The share price jumped as the company announced it will pay a special dividend to shareholders. According to the release, thanks to its strong performance in 2021, the company will pay a fully franked 10 cents per dividend later this month. On the other hand, this week's market loser was Zipcode Limited. The share price fell more than 20% over the week. They announced their plan to take over buy now, pay later rival Sizzle Inc. At the time of the offer, that represented $491 million of the whole business. They also carried out $148.7 million capital raising from institutions. Zipcode is a public limited financial technology company and acquired the buy now, pay later company QuadPay to grow its American footprint in September 2020. The market loss can be accounted to the broader BNPL industry facing the brunt of investor concerns about the likely impact of rising interest rates and rising bond yields, which are undercutting the enthusiasm for growth stocks. This week, the floods reignite calls to rethink disaster relief spending. With New South Wales and Queensland continuing to be impacted by the devastating floods, leading to talks within the private sector from those working with risk mitigation, insurance and resilience about how the disaster funding will be spent. Globally, 97% of the disaster expenditure is directed towards recovery, with the remainder going towards mitigation. This was an imbalance highlighted in the February Intergovernmental Panel on Climate Change report. Mitigating flood impact can take a number of practical forms. While managed retreat, moving people and homes out of harm's way, has been successful in some parts of the US, the cost of doing so in Australia could prohibitively be expensive due to high real estate prices. Acquisition of flood-affected properties in Lismore, New South Wales alone would cost around $1 billion. More practical measures of safeguard houses include structural measure, enhancing levees, building new levees, and more retention basins, or even rebuilding disaster-affected houses with more durable materials, for example, swapping chipboard for solid timber or plastic, which doesn't swell when affected by water. There's also a call for fossil fuel companies to fund relief payments. Australia is the third largest exporter of fossil fuels in the world, but yet companies profiting from climate change are not contributing to the bill of damages, with Green's Adam Bent suggesting a doubling in disaster payments to $2,000, but forcing coal and gas corporations to pay up. Also this week, petrol prices are expected to jump as oil prices soar. National Roads and Motorists Association NRMA revealed the price of regular unleaded petrol is expected to reach an all-time high of $2 a litre. The news comes after the price of oil soared to over $110 a barrel overnight and is expected to keep climbing. Diesel drivers can also expect to see higher prices, with an average rise of 7 to 10 CPL, making a new record for Sydney diesel prices. NRMA spokesperson Peter Croy explained this was due to the combination of factors including an unwillingness by the OPEC to increase production levels amid global demand increases, as well as the current war in Ukraine and Russia. And he states this will be the highest Australians will have ever paid for fuel. The lowest petrol prices between Australian states currently remain Adelaide and Sydney at 181.1 CPL and 183 and 181.3 CPL in Hobart, while Hobart is the highest at 196.5 CPL. Also, plans to turn Sydney's rubbish into electricity at a former Lithgow power station site. The power station has burnt coal for almost 60 years, and now its owners want to burn Sydney's rubbish to make electricity. The plan belongs to GreenSpot, a privately owned business which wants to rescue stranded assets from the fossil fuel industry and repurpose them. The company bought the site in 2020 and recently announced that it would like to invest $700 million to build a waste-to-energy plant on the site. The plant would produce 50 to 55 megawatts of baseload power to ensure consistent output 24 hours a day. The plant would also have several developments on the site, with plans to use other byproducts from the process like CO2 and heat from other industrial uses on site like intensive agriculture and greenhouses. The investment would create thousands of jobs in construction and at least 85 ongoing jobs. Thanks for listening to this week's recap and hope you have a good week in week 4.